Homeownership in Canada, it's not dead yet, but it's dying. While you were being told to just wait for lower interest rates, $83.9 billion of capital fled this country in just 4 months, which is wild. First time homebuyers have dropped from 40% to 10% of the entire marketplace. And the home ownership rate just hit its lowest point since before the 2008 financial crisis. Oh my gosh. Here's what they're not telling you about who's actually buying homes right now and why this might be the worst time in history to do it. Look, I need to be brutally honest with you in this conversation right from the start. Yes, home sales are up 1.86% from last year, but that's like saying that we upgraded you from pneumonia to the flu. Not ideal. We've got record inventory, 75,959 new listings in August of 2025 alone, the highest for an August in recorded history. Price just dropped 0.9% in a single month, which is the sharpest decline year over year, and yet people are still buying. Heck, I did a podcast last week about how September broke records over the year of the amount of listings that were in the marketplace. But here's what should probably terrify you. Canada's home ownership rate, which is the number that we're talking about today, has collapsed from 65.8% in 2025 down from 69.5% literally just a decade ago. That ain't a blip. That is a structural collapse of the Canadian dream of a home ownership. And while the Bank of Canada cuts rates to 2.5%, yay, hoping to spark a recovery, $83.9 billion in capital, that's real money from real investors, has fled the country in the last 4 months. That is not confidence. That is a vote of no confidence in the marketplace. So let's start with what home ownership is dying actually means in 2025, because the data is absolutely freaking brutal. Only 21% of Gen Z actually owns a home. Now, if you think about that, that's 1 in 5. For millennials, it's 61%, which sounds way better until you realize that 74% of Gen X and 81% of boomers own homes. And here's the kicker. If you want to look at Toronto, because it's the epicenter of the universe in Canada, why not? First-time homebuyers used to make up 30 to 40% of the market today. They're at 10%. And that is a 70 to 75% collapse in the buyer demographic that traditionally drives market momentum. But sales are up 1.86%, right? Well, here's what they're not telling you. Prior to 2020, you'd have to go back to 2012 to find an August this week. And I know we're going back to August, but it's the most complete data that we still currently have. We're comparing ourselves to disaster years and basically calling it a complete recovery. And while sales crawled up less than 2%, the new listings amounts exploded from August to September, which basically means sellers are rushing to the exits more than 3 times faster than the buyers entering the current marketplace. The result is that prices dropped by $6,500 in August alone. That's down 0.9%. That's the sharpest monthly decline in over a year. And prices are down almost 20% from the March 2022 peak nationally. This matters. So the question that people are asking is who's actually buying and who isn't? So if first-time homebuyers have all but disappeared and the market is structurally broken, who the hell is even buying houses in Canada? Forgive me for getting really heated on this, by the way. Let's start with who's not been buying in the last year. Investors. The investor species we're going to call them, has gone completely extinct in Canadian real estate, except for those who are very savvy or those who are kind of stuck because they were bought a pre-sale and that's the only option they had. I'm a mortgage broker and I get calls every single day from investors saying, can you help me to refinance this property I bought 2 years ago or 3 years ago? But nobody, and I mean, well, not nobody, but almost nobody is calling to ask for a pre-approval for a rental property today. Now, listen, I don't believe, like some, that the investment property market in Canada is completely dead. Like you'll have some people that are pounding the pavement on Mexico and on the US to jump out of the Canadian markets. But I do believe that it has definitely been massively impacted. And I imagine that we're probably at like 15% of the potential investors compared to where we were in 2021. Now, there are some move up buyers and definitely some move down buyers that are trying to cash out right now. But if you're one of them, here's my advice: sell your house first before you buy anything else. You must sell your existing home in this marketplace before you're buying the next one in the market. The amount of people that I've seen that got stuck holding two properties because they didn't make the first move before the second move is wild. And there's no reason that you can't sell first in this market with property values basically remaining mostly flat or declining in most markets in the country. So the question is, who's buying right now? First time home buyers. And yes, I know that sounds absolutely insane given the prices and the fact that they're basically disappeared from the market. But hear me out for a second. The first time home buyer, these aren't all young people. I can tell you this anecdotally as well. By the way, the new first time home buyer is like mid to late 30s or often in their 40s. They're not quote unquote young, although being 40 myself, I mean, I'm going to argue whether or not that's young. They're just freaking fed up with renting after a decade of getting screwed over by one landlord or another. Now, as a landlord on this podcast, I raise my hand to say I am a pleasant, nice landlord, and my tenants typically stay for a long, long time, years. That being said, there's a lot of crappy ones out there, and there's a lot of them that are letting go properties, and they've been screwed because of this year over year. And let's be real about the rental market. People don't like renting. They don't like it. I don't care what you say, who you are. People, generally speaking, don't like renting. They don't like dealing with landlords that don't fix things. They don't like dealing with property managers who don't show up or email back. And they hate the uncertainty of getting rent evicted, which was massive during 21 and 22 and still is today. They hate not having control of their living space. And for a lot of people, I mean, especially from different cultural backgrounds, home ownership to them means touching grass in Canada. Like having your own outdoor space and raising your kids in a house with a yard and not living in a rented condo or even in a condo or a townhouse that you own is and has been the dream for people coming to Canada. Was massive for a lot of folks. And the crazy thing is, from a reality check perspective in Toronto, like if we're talking about Toronto, or you need a family income of 275,000 and 250,000 down to buy like a low rise home in the GTA. In Vancouver, try $350,000 of income in the city for a detached house averaging 2.5 million. Even in affordable Calgary, you're looking at $572,000 for an average price point of a detached home, which is up from pandemic levels. Now, we know that someone could step outside of the Vancouver core, go an hour away, drive to Chilliwack, and pay $800,000, $900,000 for a home, which requires income amounts of 150 to 160. But in that case, you're still looking at 20% down. Same thing in Toronto, an hour outside the city, maybe an hour and a half out the city, you might get under $1 million. Calgary would be one of the lower priced properties, but we're still over $500,000, and that market has been on fire for the last couple of years. And 62% of Canadians believe that home ownership rate is 50% or less, which, if you don't believe this is the case, confidence matters. And everyone thinks that it's worse than it actually is. There's a collective sense in the community of non-home owners that the door is closing. And maybe they're not wrong. I mean, half of Canadians, so we're talking like over 54%, say they plan to buy a home in the next 5 years. But out of that, 6 in 10 of them haven't even started saving for a down payment, which means the gap from desire to actual reality has never been wider. Now, here's what should really make you nervous about buying a house in this market. Now, I'm not saying that no one should buy a house. I'm just, play with me here. Understand me here. While you're being told to have confidence in Canada, sophisticated investors, they have been running for the exits as it relates to a lot of residential real estate because the capital has been flowing out of the country. Again, as I mentioned, to other countries, right or wrong. And not all capital, of course, but a lot of it has. Some of it's been moving into commercial property, some of it's moving into different countries. In February through May of 2025, Canada saw 83.9 billion in net capital outflows. That's $83.9 billion left our country. That is not a typo. Foreign investors alone sold off $16.8 billion in Canadian securities in Q2 alone. That is the largest divestment since 2007, right before the financial crisis. And this is hitting everywhere. Like Vancouver saw foreign direct investment drop off a cliff. Calgary's attracting less interprovincial capital than it was before, despite like strong oil prices. And Toronto, which is supposed to be the economic engine, the epicenter of Canada, cannot stop the bleeding. But it kind of gets worse, believe it or not. Canadian investors, our own people, they're fleeing too. They bought 26.8 billion in foreign securities in Q2, with most of that money going to US stocks. Not the worst idea. Stocks are performing pretty well, whether it's Canada or US. By the end of 2024, Canadian direct investment abroad outpaced foreign investment here by over $811 billion, which basically for every dollar foreigners invest in Canada, we're taking 2.17 elsewhere. And that is not a vote of confidence in our country. And here's the thing. The government is still borrowing right now like we're in a freaking crisis. $71.3 billion in Q2 25, which is up from last year like 50%. And while Canadian banks are buying government debt at record levels instead of lending to businesses right now, which is what they should be doing. So the question mark is, when banks would rather park money in government bonds as opposed to lending it out, it tells you everything about where they think the economy is headed. So let's bring it back here. The Bank of Canada just cuts rates to 2.5% a few weeks ago, and they're going to make another announcement by the time you've listened to this podcast. That's the lowest level in 3 years. And they're telling you this will spark investment and make housing more affordable. But history says they're lying. Look at 2015 during the oil shock. Look at 2008-09 during the financial crisis. Every single time they cut rates to address a structural trade problem, the cheap credit does not flow into productive investment. It flows into real estate and stocks. And the bank admits investment has declined because firms are cautious due to weak demand and trade uncertainty. But cutting rates won't fix trade uncertainty. That's like a policy problem. That is not a monetary problem. That's like trying to unlock your door with a hammer instead of a key. So you might get in eventually, but you're going to break a lot of shit in the process. And the real problem, in my opinion, is that while they're cutting rates to boost consumer confidence, record money is destroying confidence. Money leaving the country is destroying confidence, and you cannot print confidence with cheap money. Also, if they're keep cutting rates while the US keeps theirs higher, the Canadian dollars tank, which means everything that we import ends up being more expensive. Oh man. So here's a reality check. Let's go coast to coast. If you're watching from Vancouver or Calgary, you might be thinking, is this just a Toronto problem? Unfortunately, it's not. But the way this crisis is playing out differs dramatically depending on where you're at in the country. I mean, starting in Vancouver, the benchmark price hit 1.142 million in September, which was down 3.2% year over year. Great. Detached homes, they've broken down the critical $1.94 million psychological floor ever since, for the first time since January of 2024. Sorry. And what's more terrifying if you're a seller in Vancouver, so good from a buyer perspective, a seller, is that inventory is up 29% year over year. Sales are actually down 24%. The amount of time on the market is past 300 days. So like homes on average are sitting on the market for over 300 days, which is like 20% longer than last year. And this is a lot of percentage points, but I mean, the data says. Vancouver first-time home buyers, they used to make up 30 to 40% of the market. And today they're closer to 1 in 10. That's crazy. That's like a 70% collapse. That traditionally, these people are the ones who drive the marketplace. In Calgary, everyone's been calling Calgary the affordable alternative. The amount of people that I've seen leave BC to go to Calgary in the last 2 years is wild. Now, in relative terms, it's cheaper. It is more affordable. The average home prices were $615,000 in September 2025, which obviously sounds like a freaking bargain compared to Vancouver's, $2 million homes and Toronto's $2 million homes. But don't mix it up, guys. Like Calgary's inventory surged 36% year over year, the highest since the pre-pandemic, and sales dropped 14%. The market that everybody went to when they were fleeing Toronto and Vancouver is starting to see the same problems as everywhere else. Calgary's supply went up. It's double that it was a year ago. Apartments and row homes, they're seeing sharpest price drops, especially in the Northeast and the North districts where we've seen supply absolutely explode lately. Overall in BC, house starts fell by like 10%. But the kicker is that most of those were actually apartments and condos, and single family homes are like non-existent. Like nobody's building them. Everybody wants a house with a yard, but literally nobody is building them. And that's why it's so unaffordable to have the dream. Vancouver rental market vacancy hit 1.6%, up from 1% last year, and rents are dropping for the first time in years. We're actually seeing that, but most new rental units nobody can afford anyway, so it doesn't really matter. Alberta overall is kind of interesting. Some markets like Calgary and Edmonton are cooling really fast, and Okanagan, oddly enough, saw prices increase. For some strange reason, I'm not sure, but we did see it in some areas there, depending on the type of property. But from province to province and community to community, there is a massive divergence. We have seen the data just flip flop around. So it was interesting. I was reading an article and I watched a video last week about the big question, which is home ownership dead? And they debated this exact question. And the conclusions were mixed, complicated. I mean, one panelist on the talk argued that homeownership is on track to die. And he said that might not even be a bad thing. And he pointed at Switzerland, where people rent happily and build more wealth than Canadians in some cases because they invest their capital in productivity and productively instead of tying it all up in real estate. But there's a major problem with that argument, and that it assumes that Canadians will suddenly become disciplined investors and that rent values will go down massively. And spoiler alert, that's not happening. Real estate has always been a forced savings plan for Canadians. Forced savings through mortgage payments have been the formula for Canadian wealth building for literally generations. And that is not an easy thing to change. And it's not about outperforming the stock market. It's about not having cash burn a hole in your pocket. Now, another panelist on this recording pointed out that investor-owned homes are growing at triple the pace of overall housing stock. So basically, right now we're building these multiplex, multi-unit buildings where that's all they're building right now in a lot of places, and private investors are basically buying them up. They're snatching them up left by one over the other. My take isn't that it's that the problem isn't the investor interest. It's that too much of it has been focused on capital appreciation instead of income. And that's bad for honestly any market, especially when the supply levels just can't keep up. And what really stuck with me is that at some point in the last 25 years, housing became a speculative asset instead of accommodation. And that was mostly policy driven, not surprisingly. From CMHC's 5% down to letting people raid retirements, savings for down payments, every policy has pushed homeownership and encouraged price appreciation, which I don't think inherently using RSP and these tools are bad. I'm not saying they're bad at all. I'm just saying the focus has always been on this, and all these things actually force capital appreciation of real estate up, not more supply. Another one of the panelists brought something up that I thought was interesting. He said, greed is not dead. It's just currently sitting on the sidelines. When prices stabilize, investors will come roaring back and outbid regular buyers, leaving the next generation even further behind. So let's bring that all together. The truth is, homeownership dead? No, it's not yet. But it could be dying a slow, painful death. And you need to understand what this means for your decisions, specifically your timelines to making a decision. If you're a seller competing with almost 100,000 listings in September alone, prices down almost 20% from the peak, government borrowing is going absolutely nuts at crisis levels, and money is leaving the country, there's probably more downside ahead right now. Unless you're doing an upsize and you're exchanging capital for capital, where the upsize is one where they're letting more go than you are, then there's an opportunity cost. But don't make the mistake. The current market activity right now is in some recovery. Most buyers I see are driven by like a necessity, not desperation, but definitely not opportunity and rational investment thesis. People are sick of waiting. They're just sick of waiting. They're waiting on the sidelines for years, and they feel good about jumping in this opportunity. I think that the play right now is positive as it relates to being a buyer from a perspective of where you're buying in the scheme of things, and especially if you're sick of waiting. As long as you're willing to hold on to that real estate, you'll do just fine. The home ownership rate, it's dropped from 69.5% down to 65.8 in 10 years. That's millions of Canadians that have been locked out from the marketplace. And with prices requiring almost $300,000 of income in Toronto for a single family home and $350 in Vancouver, and even Calgary, like $100,000 to get into a detached home for a modest property, none of that will change anytime soon. Hey, listen, truth is, this doesn't consider the fact that there is the property ladder. Get in, move up, get in, move up, trade up. It's just that fundamentally, less people are willing to get on the ladder earlier in the game, and they're taking more and more time to get there. Some experts are saying that we need to accept that renting is okay and that we can build wealth as renters. And theory, they're right. In theory, they're right. There are a few people who have done it, but in practice, we need better options. We need stronger protections. We need more, honestly, at the end of the day, we need more financial literacy that Canadians don't have. I have a belief that people would be able to buy in homes sooner, earlier, even if we deal with all the supply issues and bullshit that we have to right now, if they had more financial literacy. Last week, I spoke in front of a group of 17 to 23-year-olds, mostly entrepreneurs, but not all of them. And not a single one of them understood any of the basic elements of what is a down payment. What does it look like to qualify to buy a home? And when I asked them how many of them thought they could buy, and now remember, this is an entrepreneurial audience, so people that were really, they believe in themselves. Only 50% of them raised their hands to think they would ever buy a home in Canada, ever. Until we build some positive infrastructure, a little bit of information education, and we're decades behind on the supply element, by the way, homeownership will probably not survive. I think the truth is homeownership will survive. Not because it's perfect, but because it's one of the main wealth building tools that Canadians trust and actually stick with. So the question, is homeownership dead? No. But for millions of young Canadians, might as well be. And unless something dramatic changes aside from a quarter point rate cut and an FHSA, it's only going to get worse. Look, I am not here to convince you whether or not you should buy or you should rent. That is your decision based on your situation, your income, and your goals. But what I will tell you is this: go into the market with your eyes wide open. Understand the record inventory. The price is sharpest declines in years. $84 billion leaving the country, and government borrowing at crisis levels, all in one point. Politicians keep talking about housing affordability, but in the reality, they're just building more rental units. Desire to own for most people, probably you too, is strong. Stronger than ever, actually, because home ownership represents security. It's wealth building that Canadians don't trust in any other way. And that's fair. There's nothing wrong with that. We should hope they eventually make homeownership accessible again. But unfortunately, this would mean theoretically that prices need to drop further. And I don't believe that this will continue to happen in a crash format. I talked about this before. We will see this slow crawl, but it will work its way back up. I believe that if you're a Canadian who wants to own real estate, you need to take this into your own hands. You need to be clear and start your plan now. If you're interested in watching this video, you're already doing that. The framework is broken. The system is broken. And until it's fixed, which don't rely on the government to do that, like other than lower rates and hoping for the best, home ownership is going to continue its slow death spiral. Sorry, guys. If this reality check helped you to understand what is actually happening, do me a favor, hit subscribe. Click subscribe on the podcast or YouTube. In the future, I'm going to break down which cities have the best opportunities in these marketplaces and what to look for as it relates to values. Now, subscribe if you want the truth about Canadian real estate. No bullshit, no sugarcoating, no false hope, just honest data and analysis. Of course, if you enjoyed this video, podcast, whatever, share it out with your friends, tag it, and I'll see you on the next one.